Hey everybody, welcome to a new episode of Unstructured Unlocked. I'm your co-host Michelle Gouveia.
And I'm your co-host, Tom Wild.
And we are excited to be joined today by Doug Lotes, the Chief Revenue Officer for Insurance at Coherent. Doug, welcome to the podcast.
Thank you very much for having me. Excited to be here.
Excellent. Before we jump into all the questions that Tom and I have for you, would you mind sharing a little bit about what your role entails at Coherent and a little bit more about your experience and background?
So I'm the Chief Revenue Officer for Insurance, which means I'm largely responsible for the performance of the insurance business at Coherent and supporting all of our clients. We have around 130 now, depending on how you count them, 130 to 150. I joined the firm 4 years ago after having a long storied career in insurance technology. I got a call from Goldman Sachs when our founder was out looking for money to invest or looking to get investment dollars. And when I saw the tech, I thought I need to join this firm. And so here I am 4 years later.
Excellent.
Cool.
Well, Doug, as the conversation has unfolded here over the last couple of years, you talked a lot about the aspects of insurance and probably specifically commercial insurance that are really ripe for transformation. Commercial insurance, I think, has, it's safe to say, lagged personal lines in terms of transformation. Personal lines maybe had it a little bit easier because of the rise of mobile, right? Mobile really transformed personal lines, and partially because personal lines insurers were able to dictate more of the sort of means by which you would interact with them, right? Because of their market power, them versus the consumer. So they would say, you're going to interact with us via the mobile app, and as a consumer, you sort of had to do that. Commercial is not the same at all, right? You have what I often call like the Tower of Babel problem. You've got this very distributed landscape of brokers and MGAs and carriers and reinsurance providers, and nobody can really dictate any standards. And so it is a very challenging landscape by which to accumulate and use data in a powerful, kind of scalable way. In the pricing category, this seems very true as well. I mean, let's maybe start by talking about, where the reality is in terms of pricing as it relates to spreadsheets. I mean, spreadsheets are, email and spreadsheets are still the engines that run commercial insurers, right? So talk to us about that a little bit.
Yeah, I think to add to your comment, Tom, a little bit is the personal lines is more standardized because people can dictate that, and I think it's simpler.
Yeah.
The risks are simpler, the tickets are smaller, the insurance is all of it's much smaller. So when you're talking about large scale E&S programs or whatever it may be, there is, instead of 20 flavors to choose from, there's 1,000. And so that's where the underwriters and the MGUs and the carriers all interact together. And I believe that this is part of the reason why it hasn't modernized as quickly as some of the personal lines, because it is so different in terms of the process, the risk at stake here. I have a client that insures a large global package delivery company, and they insure every worker, every truck, every airplane, every center that those packages go through in 140 countries. And if you think about the complexity that goes into that, it's far more than my home and my boat and my three cars, right? And so that's part of the reason for the challenges in digitizing in commercial and E&S. And I think that's why it's lagged behind.
I think too, Doug, to add to that and to piggyback a little bit, Tom, on what you were saying, the data element or the information that's required to make confident decisions is also different. I mean, you could go to, and I'm going to generalize, but any of the big personal lines carriers, they're asking you the same questions about your home or about your vehicle or your boat or what have you, right? And there's variation in the risk level based on where you're located, but those risks are predominantly the same. Obviously, they vary on geography. Whereas in commercial, if you're doing commercial auto or you're doing, some other specialty line like cyber, et cetera, it's a very wide array of information that's required. Carriers are looking for different things sometimes, even within those same lines. And that's, I think, where you get into the complexity of how is that data delivered, because depending on who you work with the most or what lines you do, you have a way of doing it that maybe doesn't translate always for a standardized system, which is why you're still in the spreadsheet world, or the way that it's a little bit more flexible to try and get as much information across as possible.
Yeah, I saw a rater the other day that was done in Excel, and it was a private equity firm that owned I think there's over 150 large commercial buildings they were trying to insure as part of this. And if you think about the differences in construction and geography for all of those buildings, that gets incredibly complex. If I were to put on my old IT hat, my career prior to Coherent was IT leadership in property and casualty and insurance and general life and annuities and group. But in P&C, there's no way you'd be able to code that up and then keep that code up to date with all the changes in the marketplace. It would be a never-ending task for armies of people, which is why it lives in Excel today.
I mean, is Excel in this case, it's essentially like an IDE, right? I mean,
Yes.
that's how it's come to be so pervasive because it is powerful that way. But you've seen probably even far worse than I've seen in terms of what the size of some of these raters within Excel and the macros, and they crash when you open them, and so talk about maybe Coherent decided to go where people live rather than to take them somewhere else, right? In terms of go meet them where they are, in terms of the use of Excel and the strengths of that, but also addressing the weaknesses of that. So talk about that a little bit.
Yeah, I often say that people use Excel. Excel is the most ubiquitous software and probably the most successful software program in the history of the planet. And so we decided with Spark that we wanted to go where, as you said, Tom, where people are. Everybody understands Excel. I saw a Casualty Actuary Society's survey one time, 99% of actuaries use Excel on a daily basis. Only like 42% use Python or R. Putting on, if you think about this also, the other thing is these risks are so complex as we previously said, just keeping up with that in terms of IT and digitizing that is next to impossible, because what happens is you've got to somehow translate the knowledge that the underwriter has into code, and that requires sometimes months of requirements writing, months of coding, and then guess what? I'll just tell you this now, you don't get it right the first time every time. So then you got to go recode things, and then by then the world's moved, things have changed, and so now you got to redo that project that you just did to digitize that rating process. And so that's why Excel is such a ubiquitous tool. It's used everywhere. And I've seen, you probably won't believe this, I have seen, and we have running on our platform today, an Excel model for a rater that has 480 million cells in it and 18 million calculations.
Wow.
They called that the go home spreadsheet because they would put in their input. First, they would fire it up and hope it didn't crash. And they would put in their inputs and they would press enter, and then they'd go home for the day because they couldn't do anything else on their laptop. They couldn't send emails.
No
They
way.
would come back. It would take 30 hours to run. They would come back and hope that they liked the results. And if they didn't like the outputs, then they'd have to do it all over again. Our platform can run those calculations in about 12 minutes, and they love it because now they can do multiple iterations through those risks and get to their answer much quicker. But the amount of expense and time consumed trying to digitize things that go on in commercial insurance is unsurmountable, and that's why all these things have lived in Excel to this date.
I can only
And
imagine
that's why we built what we built.
the stress of having a reference error and trying to map it back in that spreadsheet is probably
We've found
So-
errors worth hundreds of millions of dollars. And the one that I'm thinking of, thankfully, wasn't material enough for them to have to restate their financial statements, but it's true.
Wow.
We covered this a little bit previously, Doug, and you touched on it a little bit just now with some of the challenges, but if Excel is such a powerful tool and it's so widely used and accepted, why is there so many efforts and initiatives to, quote unquote, innovate away from Excel when more often than not, that's the fallback? And, in a lot of cases, it does work, and it has worked before.
Yeah. I spent 20 years of my career as an IT guy trying to kill off Excel in the organizations that I worked in, and I was not successful, and I've not met anyone who is successful at that. The reason it's so flexible, it's a language that everyone speaks. Kids coming out of college today, they all know Excel really well. They might know Python, but it works. Excel, despite its success, has a lot of shortcomings. Version control is impossible. We've all seen the, property rater XYZ underscore with a date under it, underscore final underscore something else version 3, right? We've all seen those. I've seen SharePoint files with 600 different versions of a rater in it. Nobody's sure which ones should be used. The other thing is a lot of times I've also witnessed underwriters trying to manipulate a certain risk in Excel to make the deal fit in the box of the risk appetite. And so with Excel, once you put in new inputs and get new outputs, the previous one was lost. And so none of that data is stored, none of it. And so the governance piece, and then it's slow as well. So like the Coherent platform runs somewhere north of 1,000 times faster than Excel can run. But Excel's successful because of its flexibility, because of the ubiquity, and people already know it. And it works very well for this. And so it's really, really been a successful program.
One of the tensions that I see in many of these categories is this tension between the institutional knowledge and the individual knowledge, right? And this is a great example of that, where Excel is really captures the individual's knowledge really, really well, but the institution really struggles to know what's going on. To your point about the 600 versions, and I mean, we have a customer that every morning there's 800 people on the distribution list, right? So you can imagine the opportunity for chaos there if a few people, don't get it or still using yesterday's version, whatever it might be. And this kind of weaves its way towards regulatory risk too. So talk a bit about those aspects, that tension between individual control and institutional control, and maybe how that impacts regulatory exposure or approach.
Yeah, a lot of times these Excel models are built by someone with a very specific knowledge set of risk. Could be aviation, could be inland marine, could be anything, you name it. And those underwriters carry all that knowledge in their head, and then they express that in Excel.
Yeah.
And that becomes their secret sauce, so to speak. The carriers may or may not have a good grasp on what those risks are and how they impact the portfolio. And so that creates reserving issues. It creates, there's a million things that could happen there. The other challenge that happens is a lot of times it creates a key person risk, right? And so once that underwriter decides they don't want to work at that carrier or that MGU anymore, they put that Excel spreadsheet in their pocket and they walk out the door. So how do they protect not only the regulatory piece, but their own intellectual property that's been developed over years and years? I actually had a client that was looking at buying an MGU because they had a very specific set of underwriting rules and knowledge base around a specific vertical. And they gave us the Excel spreadsheet and said, what do you think of this? Is there any problems with it? And we said, well, this Excel spreadsheet was originated at 4 companies ago. This underwriter kept putting it in his pocket every time he quits every 2 years and walks out the door. So what you're buying here is not unique in the market in any way, and it's running in 4 other places. So you know that. And so carriers can mitigate 2 things. I think the other thing is going back to regulatory thing. All of your regulators speak the language of Excel. They don't speak Python. They don't necessarily know a lot about the risk that's inherent, that is being underwritten in the contract, but they can see the Excel spreadsheet. And so staying in that language, staying in that lane, but having the right governance and control of those things can do a lot to mitigate the regulatory and audit risk, but it can also help capture and contain the intellectual property that was built under that carrier's umbrella, if you will.
And I imagine the versioning is much, much stronger, with your approach as well, because you can actually trap what was used at what time.
Correct. We trap every API call. We trap every version. We actually convert it to code, and then we can express it back in an Excel spreadsheet with the original risks, or the risks that were, let's say that you've had it running for 6 months and your auditors want to see a specific deal that got done. You can pull that right back down in Excel and repopulate the Excel spreadsheet, the original.
I want to pull on this thread a little bit on, there's a lot of companies emerging that are, and not directly related to being an improvement on Excel necessarily, but tools or enhancements for the underwriting process, right? And there's, in some instances, you get a solution that underwriters gravitate towards and really love, and they get, attached to, and then you try and innovate around that or add a different tool or add a different workflow or process, and there's a resistance to it because it's worked, it's performing well. And so, Doug, be interested in your thoughts on what is that balance of giving the underwriters structure or tools that do some of the governance and the, traceability that you're talking about, while also not impairing their ability to use their judgment, which is their secret sauce in a lot of ways, which is why, you have all these challenges with like the underwriting talent gap. And when people do leave, it's a big gap in the company.
Yeah, I think so. You're asking me, how do you blend the underwriter's entrepreneurial sort of spirit, yet contain it in a way that it doesn't create problems for you down the road? And
Yeah.
I think where we've approached it at Coherent is underwriters are the only people on the planet that I know that have both a sales quota and a risk quota, right? They have to manage both sides of that, what I'll call a balance sheet. And so most products on the market, whether they be an underwriting workbench or some kind of actuarial capability, they are built for the masses, which means strategically they only cover about 80% of the market, and the other 20% has to be bolted on in some other way. The approach that we've done is said, let's use the tool that gives them the most flexibility and freedom, but let's put that box around it so that they can have that freedom and to be entrepreneurial, and then also documents everything that they're doing. So it documents all of the inputs, all of the outputs, it documents the controls and the logic, rather than trying to fit something that is, there's a million of them out there, and I won't mention any names, but they were built for the masses, these big policy admin systems, whatever they may be. And then the next piece is, how do you augment them? And this is where I think Indico provides a ton of it. How do you augment them with the data at the right time, at the right place that they need to make those judgment decisions? Because what makes an underwriter truly valuable is their experience. But I've also been on the other side of the table where I've seen an underwriter demand that only they can make this decision. This entire line of business is all in their head, and they won't even put it in Excel. So I've seen it all, and it is a balancing act. I'm not sure that I know precisely how to manage the whole thing, but I know how to make it a lot better than what it is today.
Yeah, kind of building on that point, it seems that, for a long time, the underwriters have had to sort of accept, well, I can only get this much data from, the broker or the insured, so I'll build my models, based on what I believe I can get. And now with AI and solutions like Indico, the volume of data and the fidelity of data is, maybe an order of magnitude more in many cases for a given submission than they could have had before. How are they excited about that? Are they adapting to that? It's the classic, with any kind of statistical regression, more data generally means a higher fidelity outcome.
Yeah, I think that a lot of folks are opening up to that, and I think they're realizing how important the data piece is to this and to underwriting, and because they do have to, underwriter has to balance both the revenue side and the risk side, and they realize that the more data that they have in their inputs, the better off that they will be, and the better judgment calls they're making. Because what data does is it allows them to make better judgments, right? And it helps increase their data set, to your point, Tom, so that the knowledge base that they have is more precise. And I think like AI is going to really accelerate this thing. I don't think it will ever replace underwriters. I don't think AI at its core is a regression to the mean. And so it will never be able to price that package carrier that I was talking about earlier that has airplanes and facilities and trucks in 140 countries and hundreds of thousands of employees, right? And so I think what you're going to see is the people who embrace it are the ones who really get a lot more business and take on a lot more opportunity, and the ones who don't ask for more data for their decisions, the ones who don't document their logic and how they got to their pricing and how they got to how they're managing. I think those people will fall to the wayside over time.
And Michelle, I was just going to add one more follow-up question there. One of the things that we've seen customers start to get excited about is, because we can bring a much broader set of data, and because of platforms like Coherent, there's an opportunity to execute sort of a technical price far earlier in the process, far further upstream, to actually use that as another input for triaging which risks make sense, right? Typically, the price is done kind of towards the end of the process, but this allows, because of the scalability and the speed of it, to at least do a first cut far earlier in that process and use it as a means to triage. Have you seen some of that applied so far? Where you guys see it from a very particular perspective?
I've seen a lot of it, Tom, and that's also why I think the people who embrace this sort of data AI revolution are going to accelerate their businesses, because I'm seeing what's happening now in commercial insurance in the sense that you want to sweep out the junk stuff that doesn't meet your risk appetite. Why spend time underwriting on it, right? If you've got better data and it doesn't look good, get it out of there. And it takes me back to a time early in my career. I was actually in banking at the time with with a large firm, and this is 2002 or so, and we started programming in, and this is commercial, or not commercial, but consumer lending. And we said, look, can we sweep out the 50% who are never going to get approved for a loan and not underwrite? So we started doing that, and guess what happened? Our productivity doubled almost overnight.
Sure.
And so that is what I see happening in commercial insurance. Let's sweep out the stuff that doesn't meet what we want. Let's focus in on underwriting the risks that we want. And then what will happen next is they'll get better at pricing those risks. They'll get better just iteratively over time because they're not focused on stuff that will never pass muster.
So I think what we're talking about just broadly is it's going to look different depending on your organization, but some level of digital transformation or modernization of your existing tech stack is what is necessary at the moment in order to compete in the market. AI hype or AI speed aside, Doug, what are some of the things that you wish carriers, or even I'll even say, because the data exchange happens between brokers and carriers on either side of that relationship, that people understood about the impact of even very pointed, quick modernizations of an existing tech stack or process?
I wish people knew this. The key strategy is putting technology in the hands of the people who know the business best in a language that they already understand. So much time is lost trying to translate this knowledge from an underwriter's head into code 9 months later. And if they just give them an Excel spreadsheet, they can get that work done in a week.
Mm-hmm.
And then you supply data from places like Indico or wherever, it makes those people smarter. It would have made my job much easier as an IT guy, because now I don't have to know how the business works. I just got to know how to integrate things. And that's a much easier proposition. It doesn't matter then if your policy admin's Guidewire or Duck Creek or Insurity or whatever it is. I just got to know how to integrate it. And I let the underwriters do what they do in a language that they already understand. It would save so much time. AI will accelerate that. And the people who take advantage of it will grow, grow, grow. And the people who don't, who are stuck in thinking they've got to code everything up by hand or even with AI, it's that knowledge transfer strategically, moving that knowledge transfer and keeping it in the hands of the business that I think will be the winners and the losers of the future.
The data suggests we may be heading to a softening market. It's been a hard market now for 7-8 years, and typically these cycles last less than 10 years. How do carriers think about using pricing as a tool to navigate what could be a more competitive market, where they're more, price takers than price givers? And what have you seen in terms of, being able to leverage the Coherent platform to address that or respond to that? And I'm curious if you agree with that.
Well, I do agree with it. And it worries me in some sense, because I worry that the insurers will take on risks that they normally wouldn't take on to try to capture business. So there's a risk there. But the thing I've seen that people love is, like, I literally have people on our platform who are updating their products monthly, quarterly. No longer do they need to update pricing once a year or I had one at the start when we booked them. They hadn't updated their ISO pricing since 2013.
Wow.
So they started with an ISO base and they hadn't done it since 2013 because it was in code. And some of the people who had coded it up had left and they lost that knowledge. All of that stuff could be done in Spark via Excel and done very quickly and iteratively. So those are the ones that are moving quickly. And I think that's the only way you can defend against a softening market. Who knows what the future brings? You read the newspaper headlines today and there's 10 million things going on the planet. How do you manage through that? The only way you can manage through it is faster productivity, faster iterative development on the tech side, making sure you got the governance in place, making sure that you've got all the pieces. And I think that it's only going to become more imperative as the world turns. And as the market starts getting softer, I do worry people will jump to conclusions and take things that they wouldn't have normally written.
And you've mentioned to me when we've chatted the power of even being able to do, scenario analysis,
Yeah.
to kind of project forward what the market could look like, what levers should we look to lean on there, in a set of possible outcomes.
Yeah, I had a customer run 300 million scenarios in a proof of value over a period of about 3 weeks, I think. So they'd run like 10 million at a time, then they'd tweak some things and run another 10 million. That scenario analysis is incredibly valuable because just you can put into it
like a Monte Carlo type analysis.
Yeah.
Okay.
Exactly. There was interest rate calculations in it. There was all kinds of different portfolio calculations in it. And
that's cool.
What it allowed them to do is think really broadly about where their business is going and how they're going to manage it, because they wouldn't have been able to do that either in Excel or in code in any other way. And so, and it was actually the finance people. It wasn't the underwriters or actuaries. They were looking at financial outcomes for their business. And by the way, my AWS bill skyrocketed that month. So.
Yeah, that's a big Monte Carlo for sure.
I don't know that I have a question to top just those last two answers from Doug.
Well, I think maybe we're at a good stopping point. I think we covered some really interesting, a really interesting arc here, and certainly I think very relevant to today's marketplace and the digital transformation puzzle. Which is, to your point, Doug. Are you forklifting it? Are you enhancing it? Are you augmenting it? What's the right level of ambition there? Because they have dramatically different risks and potential timelines, expense, and outcomes. So a lot of puzzles for carriers to figure out as they go down this journey.
Well, and one thing I wanted to add too before we go is there's a ton of hype around AI right now, and AI will change the world. There's no doubt in my mind. However, there's a ton of historical relevant intellectual property at carriers that's been developed over years and years and years by really smart people, and it exists in Excel spreadsheets. And that AI, I don't believe is ever going to take over those pricing models. Not in my lifetime, not in my career. And so if a carrier wants to really, really accelerate their business and their underwriting, everybody's heard of human in the loop, right? One of the things they can do is you don't want to put your pricing model into ChatGPT or Claude. That's giving away your IP.
Yeah.
However, something like Spark, Coherent Spark, can keep that pricing model and that IP behind a wall. You augment it with data from places like Indico, and now you can use ChatGPT to run through scenarios as well. You can use it to build a front end for that underwriting workbench. You can do all kinds of different things. And that is, to me, the ultimate human in the loop, the human using AI to leverage that intellectual property without giving it away, adding data to the mix, being smarter about the risks you're taking, and then letting AI drive out these scenarios and considerations at a speed that was never possible before. That's where I really think the value is.
Well, that's a great stopping point. Doug, it's been a pleasure to chat with you, and look forward to seeing the response to this episode here. I think it's going to be a strong one. So just wrapping up here, talking to Doug Lotz from Coherent, Chief Revenue Officer for the insurance business there. I'm Tom Wild, your co-host.
And I'm your co-host, Michelle Levea. Thanks, Ben.
Thanks for having me.